The biggest difference between a consistently profitable trader and a consistently losing trader is not strategy, not indicators, and not even experience. It's control, specifically, the control of your internal reactions, your impulses, and your emotional defaults. And today, I want to reveal the one thing that, if you cannot control it, you will never reach long-term profitability. Not, maybe, not, possibly, but never. Before we begin, understand this. Markets do not destroy traders. Traders destroy themselves because they cannot manage the internal forces pulling them off their plan. This is why you can know everything about entries, exits, patterns, and indicators, yet still lose money week after week. Every trader carries emotional weight. Fear, greed, impatience, revenge, hesitation, and overconfidence are not personality traits. They are emotional reactions that become habits. And habits eventually become your trading identity. If you've ever said things like, "I knew I shouldn't have entered that trade, I broke my rules again," or, "I held too long even though I saw the signs," then you've experienced emotional weight controlling your decisions. You don't lose because your strategy is bad. You lose because your emotions overpower your logic in the moment. Profitable traders feel the same emotions you do. They're not robots. But the reason they win is because they learned how to control those emotions instead of letting those emotions control the trade. When a new trader loses, they usually blame the market, the news, the broker, volatility, or manipulation. But the real enemy is impulse, the feeling that pushes you to act quickly without thinking. Impulse makes you enter early, exit late, increase your lot size randomly, or try to make back losses. It's the force that whispers in your ear, "This one time won't hurt, I'll fix it later," or, "I can't miss this move." If you cannot control impulsive behavior, you will never be consistent. Consistency is built on rules, and impulse is the destroyer of rules. The market punishes impulsive traders the same way every time: quick wins, slow losses, emotional spirals, and eventually, blown accounts. Let's break down what really happens inside your mind when you break your rules. When you take a trade you shouldn't take, your brain rewards you with dopamine, the same chemical that drives addiction. If the trade wins, your brain reinforces the behavior even more. It teaches you that breaking rules can be profitable. This creates a loop. You break a rule, you win, you learn the wrong lesson, you repeat, and eventually you blow the account. When the loss finally comes, the brain panics. It wants to get back the dopamine rush. So it pushes you to take another impulsive trade, and another, and another. This cycle keeps traders broke for years. The truth nobody tells you is this: your losing streaks begin long before you place the losing trade. They begin with unreleased emotional pressure. Every profitable trader has learned to control emotional urgency, the feeling that says, "Do something right now." Urgency makes you think every opportunity is the opportunity. Urgency causes entering without confirmation, exiting too early, chasing the market, revenge trading, over-leveraging, doubling positions, and trading when tired, angry, bored, or stressed. If you do not learn to slow down urgency, you will always react instead of respond. Reacting is the opposite of professional trading. Professionals don't react, they wait, they choose, they execute, they walk away. You can have an amazing strategy, but with emotional urgency, you'll sabotage every setup because the urge to act overrides your plan. Most traders fail not because they lack knowledge, but because they lack emotional training. Trading is the only career where you can lose an entire week's progress in 1 minute of emotional weakness. People think psychology is optional. They think mindset is motivational talk. But mindset is skill, and just like any skill, it must be trained. There are 3 reasons traders fail emotionally. They treat trading like gambling because they want fast results. They never identified their emotional triggers. And they never built systems to prevent emotional disaster. If you want to be profitable, you must reverse all 3. You lose money not because of the loss itself, but because you connect your self-worth to the outcome. If the trade wins, you feel smart. If the trade loses, you feel stupid. This emotional attachment creates pressure, and pressure creates impulsive actions. When you detach your identity from your trades, you remove the emotional load. A losing trade does not mean you are a bad trader. A winning trade does not mean you are a genius. It only means one thing: you executed a trade in a random market, and probability played out. The day you stop taking losses personally is the day you start trading professionally. Listen to the voice inside your head when you're about to break a rule. You'll notice it speaks in excuses. It's only one trade, this setup looks good enough, I'll just risk a little more, I need to recover my loss, or, I can't miss this move. This voice is not your intuition. It's your fear. It's your insecurity. It's your craving for dopamine. Successful traders talk to themselves differently. Their internal dialogue sounds like this: wait for confirmation, follow the rules, one trade means nothing, risk only what the plan allows, and walk away if emotions rise. Controlling your inner voice is one of the most powerful skills in trading. If you want emotional control, you must train it like a muscle. Slow down your decision making. Take 5 seconds before every entry and exit to ask, is this according to my plan? Reduce your size until you feel zero emotional pressure. If the lot size scares you, it's too big. Define your maximum daily loss and stop trading the moment you hit it. The best traders know when to stop, not when to enter. Journal your emotional triggers. Write down what caused you to break rules and how you felt before doing it. Practice walking away after a loss. Don't try to recover immediately. Recovery trading is where traders blow accounts. Build a routine before and after trading. The best traders don't jump into charts without mental preparation. Emotional control is not built in a day. It grows through repetition. There are 3 emotional forces that ruin traders every day. The first is impatience, the desire to force movement so you don't feel bored or left out. The second is fear, fear of missing a move, fear of losing money, fear of being wrong. The third is desperation, the most dangerous one. Desperation makes you trade when you shouldn't, risk more than you should, and stay longer than planned. If you can identify these emotions in real time, you're already ahead of most traders. Professional traders are not smarter, but they have mastered internal control. They don't enter the market because they feel like it. They don't exit because they're scared. They don't double down to recover. They don't let boredom push them into random trades. Professionals trade with intention, not emotion. They trade with structure, not impulse. They trade with patience, not urgency. And this is why they win. The market does not reward intelligence. It rewards discipline. You can have a lucky week. You can even have a lucky month. But if you cannot control your emotional responses, you will eventually give all the money back. Emotional instability creates inconsistent results, and inconsistency destroys accounts. Ask yourself this question: have you ever had a profit, then slowly lost it because you couldn't control yourself? If the answer is yes, you already know the truth. Your emotional system, not your strategy, is the problem. Consistency starts in your mind long before it shows up in your results. Every profitable trader has a turning point, the moment they finally accept that emotion is the real challenge. They stop looking for better indicators and start working on themselves. This turning point usually happens after a big loss or a blown account, but it doesn't have to. You can make the decision today. Decide that your rules matter. Decide that your emotions are not your advisor. Decide that your future profitability depends entirely on your ability to control your reactions. Once you choose discipline over emotion, everything changes. If you cannot control your emotions, you will never be a profitable trader. Not because you're not smart enough, but because the market exposes every emotional weakness you have. But emotional control is a skill you can learn, practice, and master. You don't need a new strategy. You don't need a new indicator. You don't need another course. You need emotional control, and once you develop it, you will finally experience the consistency you've been chasing for years. Trading is 20% strategy and 80% psychology. If you want to win, control the 80%. And if you can learn to master your internal world, the external profits will naturally follow.